Hello traders, and welcome back to another great video. Today I'm gonna cover how we can identify pullbacks in real time within a trend. Pullback trading is one of the most lucrative trading strategies out there because it makes sure that you enter into an established trend, which reduces the overall risk with your trading. Trend trading is one of the most popular and common trading strategies out there because you often can get huge profit potential if you can ride the trend all the way. So in this video, I'm gonna show you how we can identify pullbacks within a trend. So watch the video and let's get started. Alright, I have loaded the trading tool on the chart. I have disabled the take profit and enabled the exit point with the sensitivity of 5. And that's it. So as we can see in this example, we get a lot of great exit points, right? So if you were short, you would have taken your profit at those exit points, right? However, we can also see that once exit point is triggered, we can see that the market often reverse or react in some way, right? We can see exit point is triggered and boom, the market reacts. Exit point is triggered and boom, the market reacts. An exit point is triggered and boom, the market reacts. Exit point, boom, down it goes. Exit point, the market reacts or pause. Exit point, the market reacts and go down. So as we can see, those exit points can actually help us identify areas where the market will reverse and make a pullback, right? So in this case, we have a negative trend. We make lower highs and lower lows. And if we want to enter into this trend, and want to enter on the pullback, we just simply wait for an X to be printed, then wait until the market reacts and look for a confirmation in this area for a potential short trade, right? And then we get another X, we take our profit and we expect that the market will reverse, make a pullback within this trend, and we can start looking for some short confirmation setups. And boom, down it goes. We take our profit, we get an X, the market reacts, and we can start looking for another short setup, and boom, down it goes. So we can actually see how accurate those exit points can help us predict where the market will react. So if you don't know how to make trend analysis, or when there is a negative trend and positive trend, you can use our ATR SAR trailing stop. I have just loaded on the chart, and make sure you use the ATR trailing multiplier set to 5, then you get the long-term trend. So in this case, we can see that the trend is negative, and we can simply just wait for an X to print and wait for the retracement and enter short. Boom, down it goes. An X, we take our profit, we wait for that retracement or the pullback, take a short, boom, down it goes. So it's really simple to in real time understand when a pullback or retracement within a trend is likely to happen. So I mean, it's so simple to use, and those exit points are spot on most of the cases, and we can always almost in all cases expect that the price will react somehow to this exit point. In this case, we get a positive exit point. We should secure our long profit, and boom, the market reacts, makes a pullback down, the trend line is green, and boom, up it goes. And this time we get another X, we take our long profit, the market reacts a bit, makes a small pullbacks, come back down, and boom, up it goes. We got another X, See how accurate? The market just reacts, makes a pullback down, and boom, up it goes. Alright, now you understand the basic of this strategy, so let's move on and look at more examples. So let's see, let's scroll back down in time and see if we have some great examples. Let's see, this is pretty accurate and good. Let's see, okay, in this example, the trend line is green. Everyone knows that this is a positive trend. We should look for pullbacks to enter within this trend. So we simply wait until the X is plotted. We know that the price have a higher likelihood to react and makes a pullback back down, and boom, we can look for a confirmation for a long setup, and up it goes. We get another X, we can secure our long profit, and when an exit is printed, we also know that the price have a higher likelihood to react or pause, and we get the small pullback before going up again. So, and we get another X over here, we can secure our long profit, and once an X is printed, we know that the price have a high likelihood to reverse back down within this trend and make a pullback. We can start looking for a long position, and boom, up it goes. And we can secure our long profit at this point. When an X is triggered, we know that the price have a higher likelihood to reverse back down, and in this case the trend line just shifted red, and we can just ignore or not enter or take our small loss, or if we would have entered in this place, we would have considered exit our trade when the trend line is shifted to red. And boom, down it goes, and another X is printed. However, in this case, the market did not react immediately. It fell a bit more, but then the reaction came. So it's not like every crosses will not be 100% accurate. In most cases, the crosses will hit perfectly, but sometimes the crosses are a bit early and the price will continue fall and then make the pullback. Then we can enter short, boom, down it goes. All right, let's see if I have more examples. Okay, we can take those over here. This is just another examples. The trend line is green and we want to enter pullbacks within this trend. Simply wait for an X to be printed, wait for the pullback, look for confirmation, for a long confirmation, boom, up it goes. Secure your profit on the X, and once an X is printed, we can expect that the price at least have a higher likelihood of a reverse. In this case, the price continued up, so there were no trade in this case. So another exit point were triggered, and boom, the market reacted back down, made a pullback within this trend, and boom, then hit another take profit right there. The trend was shifted to the negative trend. We got an X. We have a higher likelihood that the price will react. Boom, it makes a pullback within this negative trend. We can look for a short confirmation, and down it goes. So, I mean, use those exit points as an heads up for a potential reversal, pullback, or that at least that the market have a higher likelihood to react in some way. Then we can act accordingly to that. So I mean, it's, yeah, for me it's like super simple to use those exit points in this way. Let's sum up how you can use the exit points. And basically an exit point tells us that we have a higher likelihood that the price will react in some way. and that is super useful information for you as a trader, because once an exit is printed, we get the heads up for a potential reversal or that the price have a higher likelihood to react. You can see we get an X over here. It just tells us, boom, be aware that the price have a higher likelihood to reverse back down. In this case, it did. We got an X over here. It just tells us, take your profit and be aware that the market may react and make or reverse back up. In this case, we got another X at the bottom. We take our short profit and we just start to looking for a long potential setup, because we have a higher likelihood that price will react up, right? In this case, we got another X. We make sure we just get ready for the pullback, and we can start looking for a long trading setup, and boom, up it goes. So I mean, use those take profit points to identify pullbacks, reversals, where the market have a higher likelihood to react. All right, I hope you have enjoyed this video, and subscribe to the channel, leave comments, and yeah, see you in next video. Have a great day.